Hello and welcome to Mortgage Mythbusters. This is episode 3. Thanks for tuning in. Today's topic is
Today's myth.
Today's myth.
Busting the myths.
Cheers, Barry. Today's myth is you need life insurance if you're getting a mortgage. So the myth is you need life insurance when you're getting a mortgage, and we're going to bust that today because that's quite a common question, and in this industry it's very easy to allow a customer to go down that rabbit hole of thinking that they need something that they maybe don't, but it's about education, and that's what we're going to kind of drum home. Last week we had a myth busting session, mortgage myth busting, and that was if your bank can't help you, nobody can.
Yeah. Following on from that, I've had a reminder through about mine from my bank that my mortgage is coming up. So when or will you contact me, because I've been in contact with you in the past, even though I ended up going with the bank, will you then be contacting me to give me your offer in effect or to arrange a meeting?
So just remind me who you're with in terms of...
I'm with the prominent Chinese bank. That's all I'm going to say. I don't want to libel myself.
So your current lender's got in touch with you. Normally that's about 4 months before your fixed rate deal comes to an end. Some are creeping that up to about 6 months. We will contact you as an existing customer, whether you were with us or you've asked us to, like you have in your instance. We'll contact you 6 months before to start the process again. Gives you bags of time. Hopefully we get in there before your lender does, so that we can give you all the research you need when you do speak to them. Because like we said last week, Baz, I'd want you to speak to them and see what they can do.
So just moving on with that quickly, why would they knock it back to 6 months now? Why this is the time that surely they should be chasing business?
There's a new climate. It's not for chasing business. It's that people are panicking, and it used to be when rates were a little bit more attractive, as you know, people weren't as worried about their finances. They knew they were going to get a rate that was very similar, if not identical or cheaper. So they weren't that bothered. They knew where to budget. Whereas this time there's the uncertainty, there's the media speculation, and people are panicking. So by lenders bringing that forward to 6 months, what it does is stop customers potentially calling up outside of that period for the advice that they can't execute, but also maybe he's making decisions like fixing when they're already within the penalty period, which is incurring more financial costs. So 6 months to me makes sense because we can remortgage you to a new lender, and the mortgage offer would be valid for 6 months, and therefore we can start 6 months out. But also existing lenders, your existing lender is more likely now to look at a deal 6 months out. Some are still at 4 months, but a lot of them are moving.
So is that a standard thing then? If I come to you and you give me an offer, you get me to the offer stage and I don't take it, I've got 6 months to keep it at that rate or not, or is it just at that they said they'll give us one? Could the rate change?
Yeah, it depends on the lender. So, for example, on a purchase, a new build, some new builds can take 12 months. So your offer might be valid on a new build, either 6 months with a guaranteed extension or 12 months.
All right. I just assumed it was like a 1 day offer kind of. You come back the next day, it's gone up. Or
no. So there's a lot of people. Sometimes you want that mortgage if you're doing it for home improvements and things like that. You might want that mortgage a lot quicker because you want it to complete so you can have the money to go and do your building work. Whereas in this instance, it's a case of you want to get your fixed rate, you want to do it now because of the fear of rates going up, so you secure it. So you've got a long wait. So you're worried, you've secured it, and you've got a long wait. The good thing is you've got that peace of mind that it's done, and on the first of that month when your product would normally flip to a variable, you've secured that fixed rate.
Right.
So your bank's doing their customer service and contacting you like they should, but we contacted you a lot earlier than that because we put you in the system, you agreed that we could do that, and therefore we contacted you at the right time and probably beat your lender to it. But that doesn't mean that they can't still compete, so you would consider what they offer, but hopefully as part of the research we'll have covered that off too. For all their deals may not be available yet because they take 4 months or they only look at you 4 months, we can still see as a ballpark whereabouts they're sitting in terms of their offer compared to what we're going to offer.
Right, so you've got an idea of how they're going to go with it. You'll be close enough, you think, to make decent.
Pretty much accurate, but obviously we can't see forward into 2 months where they're going to be. But this is something that we're doing at the moment with our ongoing reviewing process, that when we have sorted your remortgage out application and it's not going to complete for 6 months, we're keeping an eye. So if there are rate movements, we're updating that advice to make sure you're getting the best deal. And we touched on that last week.
And that, again, I take it, is triggered by the system that you have in place, so that's flagging up when people...
That's the system, own general admin, and also the reminders that come through from lenders. So we keep an eye on the market news every day, and if Nationwide's reducing their rates, we're going to pull up the system, search for every mortgage we've got nationwide that's waiting, that isn't just completing tomorrow, because obviously we don't want to muck about with paperwork that close to completion, and just make sure that the customer's got the right deal. At the same time, you may have already been with someone else, and we'd have a look at that too. We've got to draw a line on it somewhere to be able to not be shooting you or ourselves in the foot by constantly reviewing a rate, but it's pretty obvious when a lender has made a big rate movement to the point where it's going to benefit you 10, 15 quid a month.
All right. Good. Very good.
Okay, so that was last week. Today,
that was last week.
Like I said, myth busting topic today is you need life insurance to get a mortgage. Okay, so our guests today, as usual, we've got Barry and myself, Paddy, and today we have our protection advisor, Joe.
Good afternoon, gents.
Good afternoon.
So this is the first advisor, other than myself, who's joined us on the podcast.
I think I already mentioned that one to you. I think I spitballed that, and I don't know if you were too keen on it.
So Joe's joining us. She is an advisor. She's dealing with the protection side of the business. It's a department in itself, and by the end of today's little chat, you should have a view why. So with protection, the myth being you need life insurance to get a mortgage. Barry, I think this is one of
the first myth is that protection isn't what I would say protection is. I think I always think protection racket, protection. I don't, security. I don't think of it. It's only with obviously working closely with yourselves that it's like, I understand that means insurance, because that's all I would have ever heard was the word insurance. I would never have heard protection with regard to anything to do with like financial things.
I think we use the word protection to cover kind of a number of topics, and that's kind of your life insurance, things like critical illness insurance, income protection insurance, family income benefit insurance. So it kind of covers the protection comes as an umbrella, really.
So is that in effect similar to your buildings and contents insurance or your car insurance? It's the same thing. If the worst comes to worst, that's going to pay out to cover your costs, basically, of what you're going to miss out on, in effect. You're paying little chunks to accrue like a pot that they'll pay out, in effect.
Yeah, that's a general idea. I mean, you kind of your car insurance and your building insurance, they're classed as general insurances, and they can renew every year. Whereas what we're talking about when we're talking about life insurance and critical illness, for example, your protection insurance, which should kind of then based on a longer term, and that's the idea. Is to protect. Really, so for example, life insurance is to protect your family, your spouse, you against that. God forbid anything happened to you. It protects them financially.
So it's insuring yourself rather than your property. Then it's like you're the actual.
Yeah, and that's the thing. The crazy thing is that if I said to you, for example, what's your biggest asset? What would your answer be? What would you say?
Probably one of my drum kits. No, my family, obviously. Family, you've got, Yeah.
Absolutely. And that's right. The answer I get quite a lot is my house, my car. Well, actually, the biggest asset is you.
Of course.
Because you're the one that's earning the money to be able to provide the house, the car, the holidays and everything else for. So it's really important that is protected. And if you think, for God's sake, people, you insure your pet. Your dog's not earning you any money.
I mean, from my point of view, I came when I first started working for Paddy. Obviously, I knew it was mortgages, and I came in, and then he was getting me to brand stuff up and that. And then he started pushing this protection side, which I didn't really know what it was. I thought it was something to do with mortgages, and it's only then when I started working on doing some designs for you, which were like, you pay X amount for Sky Television, why you're not paying for your life cover or your critical illness cover. And I think it was one day probably when we're having a beer or something, actually, when I said to you, like, what this is kind of what I've got. What is that any good? And you sat down and said, well, you really should be not just protecting me from being ill, or like say someone dies. The way you explained it was it's all the other things that come into it, such as caring for someone. You might lose income because there's so many sort of facets to it. But you said basically just get it done, get it sorted.
Which brings you back full circle, because your point you touched on is protection. What the hell does that mean? And you said make sure your family is protected. So as a name of a mortgage and protection advisor, it kind of skims over it. You only hear mortgages, mortgage and protection. It's like what?
Yeah.
But the protection side of it is a huge part, and that's why some of our customers, maybe in the earlier days, they'd come to us and go, "Oh, just to let you know, I've sorted my life insurance out." And we're like, well, we do that. We explained we do that, and we're going to get to that. Well, I didn't realise you did that, because the mortgage and protection advisor doesn't do that unless you spell it out.
Right.
It does form, like Joe says, an umbrella. But protection is a good way to look at it when you understand what it is. And if someone doesn't understand, like you didn't, it's a good deep dive into explaining. Well, actually, protection covers everything.
So is the reason, I take it, that it's so interwoven with like the mortgage market is because that's your biggest investment you're going to make, a house in effect.
Yeah.
So is that the reason? I know obviously you get car insurance. I suppose they don't try and really flog your car insurance when you go and buy a car.
Why do you get car
do you know
insurance?
What I mean?
Though? Why have you got car insurance?
Well, to pay out for the car if I crash.
But why have you got it?
Because you told you have to have it.
It's a law.
Because you have to have it.
Yeah, so you've got to have it. And that bit of metal that you own, yes, of course, if something happens to it, you want it to be insured so you can get a new lump of metal. But you never want to claim on it, do you?
No, not at all.
No. You'll pay the premium,
yeah,
and you just hope that you never need to use it. It's exactly like life insurance.
But how come they don't? So you go into a garage, you buy a car, they don't try and sell you car insurance, sorry. But
because it'll probably put you off when you realise how much it is.
Yeah. So is it? So
buying it,
are you duty bound to do this though? In effect, is this something that you have?
Without a doubt, it's one of the biggest responsibilities of a mortgage advisor to explain, as part of the mortgage, the consequences taken on that debt. Whether it be, what would you do if you lost your job? What would you do if this? You've got to look at it not just now. It's like in the future. And the way we like to put our umbrella up is to say that no matter what happens to you, we will be able to make sure that you can afford this mortgage, because we're getting you it. So that's whether or not it's protecting your income, your life, critical illness, for being off work for a long period of time, for sickness, as well as the building contents. Property burns down, gets robbed, needs to be rebuilt. It's one of those where we have to do it. Do you have to take it, which is the myth? No.
You don't have to.
So building and contents, yes, legally. It's not like car insurance where they'll pull your house over and say you haven't got it. But as part of your mortgage contract, the lender will 99.9 times want you to have building insurance, because obviously they've secured against that asset, so they need to be making sure it's protected by an insurance policy. Some lenders, my own, Cumberland Building Society, will also take out their own policy to protect the property, and they'll bill you for that if you take it elsewhere, because you could cancel your policy at any time, can't I? I can cancel mine, whereas the lender, they take a double insurance out, because they don't trust, if I don't take it with them.
Oh, right. Sorry. So you don't go with them, you say you're going to do it elsewhere. They then take out their own policy and charge you anyway. So you're better off just going.
Yeah, they'll only cover the buildings. If I lose my mobile phone or break a TV or something like that, they're not going to pay out. But it's to protect them, and it's an old school way of looking at things, because I can take out insurance today and cancel it tomorrow, can't I? You could buy a car, show your insurance at the what's called forecourt when you bought a car to prove that you can drive it away, but then you get home and you cancel it and just drive around without insurance. So it is protecting them, not you. They don't care about you. They care about their asset, which is that particular property. So the myth is that you need life insurance to get a mortgage, and the truth is you don't.
But then it's just what's morally what's right, and for your family as well. Thinking, would you really want to leave your family in that situation with having no insurance when it could have actually been costing you £6 a month?
I must admit, for me, I assumed that your employer paid, or there'd be ways of you'd get some kind of payout. I was totally uneducated on it, and it's only when I started talking to you that opened my eyes of like, this could happen to anyone anytime.
And some
And
employees, you know, some you
terrifying,
do
isn't it?
get, you know, you can get. I mean, we deal a lot with the military, so you know, and again, it's one of those where they will get death in service, and that can be 3-4 times salary. But again, you kind of got to look at the whole mortgage debt and the liabilities, the other debts that they might have. You know, does that cover anyway? Does that cover the full amount of the debt? Because the assumption is that it does. Well, actually think about it. When you work it out, does it? But also, when you know, if you're say in the military and you know, you die, you get death in service, your family is still that might pay the mortgage off, but your family have still got then to live their lives. They've still got to.
So if you're leaving someone behind, they can't work because they're looking after kids or.
Absolutely. Right. So to take, you know, even with death in service benefits from work, we would always say it's always good to have a separate life insurance policy, even if it's just to cover the mortgage debt, so that can pay. The insurance policy can pay the mortgage debt, but your death in service then can go to your family for them to carry on with their lives. There's still bills to pay. There's still kids to get through school. There's still hobbies.
It's a massive thing, isn't it?
Yeah.
This is the thing, and it's like anything. You don't want to. It's like wills and that kind of thing. You don't want to think about the worst. Well, I didn't. I did not want to think about the worst. But it's only when you say it, and it's not scaremongering. It's like, what this could happen, you know.
But if a customer comes to us dead excited about their new property and can't wait to go and pick that kitchen, mortgage, property, that's all they're thinking about. We sit them down, we give them the good news, they can get the mortgage, and that's all they hear. And then it's like, right, okay, let's talk about what would happen if. Because we want to get them the mortgage, but we want to know they're going to afford it. What would you do if all of this money that you're making now and doing great and got a great deposit, now you're using that deposit for the property and you've depleted your savings? What would you do if this X, Y, and Z happened? And when you make them think about that, they don't want to think about that. And it comes across as salesy because we've got to have that conversation. We've got to really put them on the back foot. What might be interesting is, let's have a little bit of a role play now, right? You're going to object the shit out of everything I say.
Well, I was just about to say, it's very similar to when you used to go to Curry's and buy a stereo and they try and give you the insurance on it. And I would instantly think, if I went for a mortgage, you'd be like, why are they trying to sell
So you've got death in service with your work, right? So use that as the right, okay, so you need this, you've got a mortgage, you need life insurance. Right. Baz, here's your life insurance.
I don't need it though.
Why?
Got death in service.
Okay, cool. And are you going to be with that employer for the rest of your life?
Well, I don't know, but I'd imagine so.
If you
surely I'll
go
go somewhere that's
10 grand more, you get a pay rise. Yeah, you go elsewhere.
Yeah.
But there's no benefits like life insurance. Would you take that 10 grand pay rise?
Very probably.
You go self-employed.
Yeah.
Are you going to give yourself your own benefits? Do they exist if you're self-employed?
No.
Yeah. So
not really.
Straight away, what you're saying is that you've got it now, but you don't know if you'll always have it. Yeah. But if you take this life insurance policy, which is X amount per month for this amount, then that's always going to be in place and always going to protect you. Yeah. If you move jobs, that stays. If you go self-employed, that stays. If you win the lottery, you can decide to cancel it, but it could also stay. Okay.
So what if I had say death in service and then I got some cover from yourselves? So if you have that from your employer, you got cover from yourselves. Does that make one of them null and void?
No.
Or does it? You get double bubble in effect? Is it like?
Yeah.
So is there people at your work who don't have family, don't have 4 kids, and don't have a mortgage?
Is there? Yeah, of course.
So they've got death in service.
Yeah.
What's it for?
Parents? I don't know. I don't know.
Yeah, it could be for the partner, could be for their lifestyle, could be for their unsecured debts. But let's say they've got no mortgage and 1 kid, and yes, they've got the death in service, but they've got no life insurance, whereas you've got the asset as well. So your 3 times salary might not touch that mortgage, might not even make a dent. But also that you've not left that death in service, if you were mortgage free, would be to support the family. So what you need to do is think of the debt you're getting into, the mortgage, and we need to protect that. Anything else is an additional extra, the benefit, which actually call it that, your work benefit. Yeah. So it's kind of like not saying, look, this is an objection and this is how you need to rethink about it. It's just thinking that, yes, you've got that now and you've got death in service benefit. But if you move jobs or your circumstances change and you go self-employed,
back to square one.
Or ill health may actually lead you down the line where work could like kind of say, look, there's no place for you. So if you're suddenly getting a back injury and you can't do your job anymore in that particular area that you're working within, then obviously you may end up in a different job or having to retrain completely.
The thing with insurance as well, the younger you take it out, the cheaper the monthly premiums are going to be for you. Because every time you have a birthday, you know, as you get older, the premium would be higher if you tried to take it out later on in life.
So do they not go? Will that'll go up though? Will it every year?
Depending on what type of policy you have.
Right.
If you've got, you know, if you are going for like a decreasing level policy, then no, it'll stay. You know, generally they'll stay the same.
Oh, right.
You know, from when you took yourself, like a 20-year-old, we always say, just take it, for God's sake, it's so cheap for you. As long as there's no kind of underlying health conditions, you know, you're going to take it out. But then, yes, there are policies that can, you know, if you go for like an increasing cover, which is then linked to the retail price index, obviously, so it's got to keep up with inflation, and later on the less the premiums can. And there are some providers.
So that's almost like a tracker mortgage, is it? That kind of goes.
Yeah, it would
It's
go,
kind of,
it would go up in line with the
Yeah.
the 100 grand would turn into, let's say, 150 grand. So
Right.
you're gonna expect about 50% increase in your policy premium that you pay.
Right.
Quite an unusual way of taking out insurances, but it's very old school way of doing it. We're kind of looking at what we do at PGS is we look at the big picture. So you get a 100 grand mortgage over 25 years. We'll talk about that. This is what you could, because that's all you need. That's what you need. Anything that you take less than that is, in my eyes, irresponsible. Parents are billionaires. They're going to pay off your mortgage. Then brilliant. Why are you getting a mortgage in the first place? Yeah. Joking aside, for the amount you're paying to cover that mortgage, it's kind of something that you would take if it was illegal, if you had to legally, like you do your car insurance. But it should be the first on that to-do list. You know, mortgage. Something happens, mortgage is cleared. So a way of explaining it to you in terms of why would I? So let's say you've got equal partners, both earning 20 grand a year, both got a 100 grand joint mortgage, yeah? Something happens to you and you're no longer here. Let's say you get your death in service payout, okay, brilliant. That other person who's remaining has to look after the children, probably can't work full time. Let's say that you've only managed to pay off half the mortgage balance because of death in service. Then the lender won't just agree with you and look on compassionate grounds and say, okay, we'll let you off. If it doesn't meet affordability, then you're going to be in an issue there where you can't afford to have that mortgage, okay, because you're now on a lower wage. So you've got that to think about, is what you're leaving. Is then the only option to downsize, sell that whole family home and then move into it. So the ideal scenario, God forbid anything happened to you, is that mortgage is paid off. Yeah. A dream scenario is that you also had a lump sum from whether it be your work benefit, death in service. You also had what we call family income benefit, because that's going to provide an income until your kids are 21 or whatever age you decide. Yeah. So you've also got not an income, but family income benefit isn't necessarily that. And it just means that actually, when we looked at everything that you have going out and your lifestyle and things like putting petrol in the car, hobbies, kids want to do X, Y, and Z, then you've covered that whole amount and you've thought about absolutely everything. And then what Joel will do is produce her research and recommendations based on the demands and needs of that. So yes, it may be too expensive, 100 quid a month, I'm not going to pay that. Yeah, but like you do with your car, you can tweak the policy to have a higher excess or maybe take third party just to get the price within your budget. And Joel works on that budget to say, look, that is what you need, okay, but it's unaffordable. So we're gonna work with what you can afford and make sure you're taking as much as possible that gives you that peace of mind that should anything happen, your life is sustainable.
And is that something that you can amend? So could you, like, say 2 years down the line, you've had a pay rise, can you come back and then say, can you reassess it?
Increase the amount of cover. Or you can always increase the amount of the sum assured, on a policy. Sometimes you can do that with the one you're with now. Right. Sometimes it's better to look at replace.
So is that almost like a remortgage? The way you would do a remortgage, you're looking at the figures again and taking it as like a blank slate.
Not really, because with the mortgage, like you'd have taken out that mortgage 10 years ago, and normally you'd think, well, actually I want to keep that rate because it was great. So with the life insurance, you'd have taken it out 10 years ago, that you'll never get that price again because you're older. Yeah. Never mind health issues, but you're just older, so it's going to be more expensive. So you would kind of lock in that one and ride that policy out because it's got another 15 years and it's cheap as chips and it's still got X amount of cover. What Joe's saying is that we would then look at, is it more cost effective to bolster onto that policy? Right. The additional amount of cover, yes, it's more expensive, but at least the whole thing isn't becoming more expensive. Plus, when you've got life insurance, you shouldn't really look at altering that insurance to the point of getting rid of it and starting again. Because it's not the done practice. So if anyone ever comes to you and says, I can do your policy, I can do that policy, then I'd like to see them try, because to beat a policy that's like for like always comes down to age and the amount of cover that you take.
So the thing that I find confusing is, right, if you buy £100, you get £100 mortgage, and I don't know, say it's 20 quid a month insurance to cover yourself on that.
Yeah.
Right? So then what you're saying is, if it was, I don't know, 10 years down the line, I've paid loads of that mortgage off, you would think it would be cheaper because you'd need less. Do you know what I mean? Am I understanding that or not? Because I don't know.
You would need it, but they've already thought about this. So they would do a decrease in policy, wouldn't they, Joe?
Yeah. So basically, generally, when you if it's to protect a mortgage payment, and that's what you're protecting only, we call it a decreasing term assurance, and basically that is you know. So if you had a mortgage for say £200,000 over 25 years, what we would do, we would put you on a decreasing term assurance, which then is kind of like tracks. You know, the whatever pays out. So if you died, say 10 years into it, the insurance policy would only pay out what's left of the mortgage. So it kind of tracks the mortgage in a downward.
As your debt in effect going down. So is right. Okay.
So would the payout that you would get, and that's the kind of the most cost effective way of doing like a life insurance, especially when it's to protect a mortgage, mortgage debt. So that's how they kind of get away with that one. So, but the only time really, when you're having to look at any changes to, anytime you change your job, anytime you do a remortgage or a product transfer, purchase a new house, it's always time to take stock of your insurances, because, and this is a conversation I have, every day of the week, is to make sure that the policies that people have in place are still fit for purpose. We never want to replace a policy that's, good and is doing the job it needs to do. But if it's not, that's when I've kind of got to point out, well, actually, and a lot of the time it's because it's not so much the sum assured, it's the term of the mortgage, and that's kind of the more complicated bit, really. If your mortgage might end in 2050, you might have an insurance policy which is took out, 10 years ago. But it's only valid up until 2040. Right. So it's going to leave you 10 years short, and that's why it's really important for people to have every time you do a remortgage, just to have that conversation, because what happens, people take an insurance policy out, put it in the drawer, forget about it completely, and think they never.
I didn't even know I had.
Exactly.
I had two. One was like a PPI thing, which I didn't know what it was. 90%
of people are exactly like that. And that's the whole point of having these regular conversations, to make sure it is, and hopefully, like I say, we don't want to replace, because it's not cost effective for you. It's not the best option for you. That's
try and bolt something on.
But we'll try. We'll sometimes we have to replace if it's just not fit. We have to. But if we don't have to, we won't, and we'll work around that with.
So with that, then, are you prompted? So we went through the system on the first podcast, that Paddy's own system, which basically lets him know when people's mortgages are coming up for renewal. And so if you know that's happening, do you also get a prompt to contact them about protection? Because, as you say, things might change with their circumstances. Or do you have anything that prompts you, or are you waiting for people to make? Is it more
just let them know,
coming into you?
We just have to let them know that we're here, because when these things happen, like the life events, I hope we're the last person they think about. Just had a kid and must speak to Joe. You know what I mean? Yeah. They've got better things to do. But by us reminding the customer that we're there and offering them the opportunity to.
But that is a bit of a sobering thing, though. Your whole viewpoint changes when you've had a kid, or
I find that
so
a lot.
you do.
Speaking
so you do,
now,
you do. Yeah. I would have never really. Well, I'm not. I'm fairly risk averse, but I'd have put it to the back of my list of things to do when I was 20. You know what I mean? Whereas, like, as soon as you have your kids and that, you kind of think.
But these are things that would have talked about, or Joe will have talked about, when just two adults living in a property, not started the family yet. Would have touched on what their policy may have, like it might have the children's benefit attached to it because they haven't ruled out having kids, and obviously having that as part of the policy, for all you don't want to think about that, God forbid anything like that, having to go through that would be horrific, but it's there. But people, when they haven't got the need, they don't concentrate on it. They look at the other things, life amount, that's it.
I think that's our job, though, isn't it? That was part of here is we're not just servicing people once. It's, you know, we want to see them through the whole life cycle of their having the mortgages. So for me on the protection side, you know, obviously generally people are fixing it maybe for 2 year, you know, fixed rates. So I would automatically get to talk to them because we'd have to talk to everyone after every, you know, mortgage or product transfer, what it is, every time. But also we get like the anniversary reminders, you know, as well from a lot of the providers who we work with. They'll kind of
that's quite good though, isn't it? Really, you know, and then you.
So we can then, you know, obviously communicate.
And can someone come to you if nothing to do with the mortgages? Yeah. They can just come to you. So I don't know, buildings and contents, or if someone just comes in and wants some life cover, then come to you. That doesn't have to have anything to do with having a mortgage with you. It's a separate.
And do you know what? You know what triggers that? They'll ask us, "Do you do it?" Even though we shout all over social media that we do it, they concentrate on the mortgage because that's what we are. But when what will trigger it is a life event happening around them. So we will constantly get, oh my God, I need to speak to you about life insurance because of this, and this.
Something's just happened to a family or a friend.
Well, this is it, though, does it? It's so busy, doesn't it?
And then it becomes a very different conversation because imagine when we're doing your mortgage, how much I know about you. We understand your hobbies, we understand your debts, we understand how easy or difficult it may be to make that mortgage payment. We understand what you do for a living. We understand a little bit about your work benefits. Whereas when we're starting from scratch, it's hard for Joe to go down that route because the customer still is blank and doesn't know anything about it.
Yeah.
So to get them to talk about what would happen if and when, we almost have to do that in the original fact find and say, what do you have a mortgage? Do you have a property? Do you have how's your family? What do you do for a living? So we're asking questions.
It's knowing what they're wanting to protect. You know, that's the whole point. Is it a debt? Is it the health? You know, is it their income? You know, what is it that they're looking for?
But pretty much everyone of like working age will have something that they need to sort of protect, though, won't they? You know,
I think statistically, like the amount of people that are unprotected is huge.
Is it?
And it comes down to just education. If they're taking out a mortgage, they should have at least. And what we're building in our practice is, they're taking out a mortgage. You'll do one of three things. You'll either have a chat and take the cover. Okay. You'll either have a chat and not take the cover. So there's two. You've had a chat both times. One, you've took the cover, one you've not. But you'll sign a disclaimer to say that you appreciate and understand the recommendation made. However, you choose not to take that cover. On your head be it, we're saying you're daft for not taking it. But like this myth is busting, you don't need it for your mortgage. Does it change my attitude or the lender's attitude? No, not really. Because we hope that people will never need it. We hope that they would have other contingencies in place, like rainy day putting money away, and that works out. But the day after getting a property, you could get hit by a bus. The third option is they don't want to discuss it at all, and we do get a lot of that. Luckily, we still have the chat because we will explain that, look, it's not sales. They expect us to ram policies down their throat and say, you're taking this or we're not doing anything.
But what if they just don't turn up to the appointment? What if they just don't want to talk?
We'd send them a disclaimer where they opt out, which basically
opt out of the chat, right?
We've done all of this, we've offered all of this, but you've chose not to have the chat. Sometimes at that point they'll read and see what we do and then be like, oh, I do actually need that. But I'm not going to take the risk, and as an advisor, that my mortgage that I've recommended for them isn't going to be able to be paid no matter what happens to them.
So there's 2 points from that for me. Is it legal for you? It's your legal obligation to make sure they've got cover or not. You, as an advisor,
it's a duty.
Is that when I say that's part of your?
It's not a legal requirement, but it's a duty of care. But don't get me wrong. I think in the future, those people that haven't taken protection and their mortgage advisors haven't had that discussion with them and documented it, that the customers would have a case to say,
it's like a reverse PPI, isn't it? Really?
Absolutely.
It is exactly that, mate. They didn't take insurance because I didn't get told to.
But that's what I think. If as soon as you would mention it, I think it's probably better that you do say protection, because insurance to me is, first of all, it's your car insurance, which in buildings contents, which touch wood you never have to use, and you just think, fucking what a waste of money that is. But also there's the whole PPI thing that, like, I think that's tarred a lot of insurances and cover products. Do you know what I mean? For someone like the just general public like me, you'd be like, you don't really need it. So I think there's a lot of things to do with education. People need to be more educated about it. But the other point was going to be, if you're having to do this, so it's kind of legal, your duty of care, why is it not legal thing that you have to have it then?
I suppose because
You have to have it with the car, to
not-
drive a car. Why you should have to have it to live in your house?
Because
Surely if you're...
not everybody can get life insurance because of health reasons. Yeah, not
Right.
everybody would need it because yes, you might have a mortgage, but your parents may be able to.
So how does that work then? How does that work? So if I've got health issues that stop me from getting life cover, but something happens to me, what? You're just screwed, or what? Like is...
Sadly, yeah. Sadly.
But that doesn't sound.
I mean, it's
fair.
not.
Does
If
it?
you've just got
Do you know what I mean? It's
if you've got a broken toe, you'll get life insurance. But if you've had in the last year, you've had I don't know 3 heart attacks, and you've survived, and they were just mild heart attacks, then obviously it's like gambling. And no insurer is going to say we'll cover you.
Yeah, but then so what
Or
happens?
they might at
In a massive
high,
cost.
a
So
high
what?
cost,
So
absolutely.
is this the same way that you were saying? You can get. You would never say that you couldn't get someone a mortgage, but you would say you might not get them it now. Could you sort of guarantee that you would be able to get someone something that might just be a higher cost, or is there certain people that you just couldn't, people wouldn't touch?
Well, there'll be certain illnesses out there where the links of it, like that could happen, are going to rule out any insurer.
Just seems really like, I know it's a bit melodramatic now. It just seems really unfair, that doesn't it? They've already been dealt a bad hand, but then might
Sometimes
not be
there's
able to be.
exclusions as well. Some especially like for critical illness policies, for example, as well, that they might insure you, but if there's an underlying condition, they might have an exclusion on that because obviously, like Paddy was saying, it's a higher risk for them. They'll still be able to get you for other conditions, but maybe not for that.
Hereditary as well, isn't it? Like not
Right,
you,
right
but
to
your dad's had something, and there's a statistic that will say that you are more likely than I am to.
So is that
so
do they do
many
like a health check on you then?
Yeah. So basically, when I'm having the part of the chat which I have with people, I have to go through some quite in depth.
Yeah.
Well, not in depth, I would say, some personal medical, data.
But you would expect that.
And it is like a bit about family history, a bit about themselves. Is there any kind of underlying conditions? Have they had time off work? That type of thing. Then from that information, I would then go and do the research with the providers to say, well, they've got this, and this. Sometimes it's the rated, which means they'll put a premium on, an additional cost onto the monthly premium, or sometimes there might be an exclusion to say, no, sorry, we won't cover for that.
What happens if you don't know? You don't know that there's something hereditary that your mum and dad have got, but you don't know about it. You take this policy and then that rears its head. Well, this is it. But what if it suddenly rears its head? Like, is that? Do they think of that the same way as you maybe were withholding it from them? It's kind of a fine line, isn't it?
There's a kind of how those kind of days have gone a bit now, thank goodness.
Right.
In that, and also the emphasis is actually on the provider to ask the right questions. So as long as, like for myself, I have to disclose, and part of the conversation, I have to say to people, you need to be as honest and as accurate as you can be. If you can only disclose what you know. If you don't know.
But if it turned out that they'd been to the doctors years ago about this, then obviously, that they're pulling the wool over your eyes a bit. But
if they're non-disclosing, absolutely.
Yeah.
But if there are kind of things where people don't necessarily think that something was an issue.
Yeah.
And it will depend on the.
I think there's a difference between a damn right lie
exactly,
and something where there's a bit of misinformation or a date wrong.
And we've had it before. I mean, I've gone through it, and I didn't disclose something which I completely forgot because I thought it was nothing. But then, and actually, they still paid out. Because it wasn't, it was similar, but not, not quite the same. So
I suppose it's the same as if you're coming. You could fiddle your bank records if you're coming for a mortgage. In effect, if it's all down to the person's honesty, I suppose in that case.
But the GP reports.
If they tell us I'm a non-smoker and we're not going to question it, we'll put that through. At the end of the day, when it comes to claim, they'll find out that they are a smoker because it'll be on the GP records, won't it?
Right.
There's no point paying for an insurance policy which is not going to pay out.
Yeah, exactly.
So why would you lie?
It's like we had that like stain guard or whatever it is on our sofa, and it's like you have. I can't remember what happened. I think we were lighting the fire and a match had burnt the top of like the puffy or whatever you call it, and we were thinking, it says in there that you can't. There were certain things that you didn't cover, and it's nerve-wracking thinking.
Is that
bloody hell? You feel like you're lying in a way, but you're not. You know it was total accident, and if you're doing that for life cover, or something like that. It's
Yeah.
a big gamble to be playing, isn't it? Really.
But again, it is up to the providers as well to ask. So once I've got the information, I can only answer the questions on the application what they've asked us.
Right.
So if the provider hasn't asked a question
Yeah.
on something specific, then the onus is actually on the, and that's why it's kind of switched probably over the last. And you'll know better than I do, Paddy. But that it's that question, because it's that kind of consumer duty.
I was going to say to the consumer.
The whole, I mean, I've been in this industry only for a year now, and I've never known an industry so regulated. It's unbelievable, and a part of that is probably from what happened, what's happened in the past with the, back in the crash in 2008. But the whole industry, and that goes for protection as well, where kind of everything's changed, and it's all about looking after the customer now. And this is from the FCA, the Financial Conduct Authority. Our network, who we work under as well. That you've got to look after the customer comes first, and everything is about what's the best outcome for the customer. So
which is good,
absolutely, and so it kind of, you're right. So again, there's all those people saying, "Oh, but they don't pay out." They don't. Yeah. But actually,
but if you speak to,
but that's a legacy thing that everyone thinks.
If you speak to us, we'll drop that guard straight away. Same as in a mortgage. There's no point telling us you're on 40 grand a year because you're trying to be bigging yourself up. If you're on 39, we're going to catch up because you're going to send your pay slip. We'll drop that barrier, or Joe will, when she's speaking to them, to make them feel comfortable. How many drinks do you have per week?
Yeah.
And we'll build that into the fact find, and we'll talk to them, and then we'll build it like a conversation. We're not going to be insensitive to say, oh look, like, have you ever had this scare? Yeah. What happened? Because everyone's had a scare. Like, what's happened? And we don't want them to be afraid to say, oh, I won't say that because then they're not going to insure me.
Yeah.
We want to reverse it and say, tell us bloody everything.
Yeah,
because
absolutely.
then we can disclose it all.
It might not be an issue in the end.
Like Joe says, if there's a place on the application to put it, we'll put it. Like you went in, you thought you broke your ankle last week, and right? We'll put that on the application.
Yeah.
Because if your ankle does break next week,
exactly,
and you're trying to claim on fracture cover, they could say you'd already broken your ankle. But if we'd have put that in the records and the GP can back that up, they'll pay out. So it's just disclosure, like on a mortgage. I gamble £10 a week. We put that on the application. We assess it. We assess that risk. We build it in. But just like on a mortgage, in protection, they'll build this into the price, because what is nuts about it, Baz, is yes, you could be the healthiest person, 29-year-old, never smoked, never drank. We give you life insurance. You've got the safest job in the world. It's as cheap as it can ever be for that particular scenario. But tomorrow you could start base jumping, smoking, and taking Class A drugs, and your policy doesn't get to be rewritten. It's based on an application. Similar to a mortgage.
So what does that mean for me then? So would that mean I wouldn't be covered?
Are you base jumping now, or?
Well, I still am. Yeah. I declared that and I got me covered. So what would I? Which way are you saying then?
You could decide to do base to go parachuting as a professional. Whereas if you'd have done that on application and you were in the middle of jumping every week at a competition in parachuting. Skydiving, then there would be a rated premium on.
But how do you know that I wasn't already doing it? I'll just say, I took it up.
Joel have asked you about your hobbies. Whereas if you take that up afterwards, for one, they'll look into it and like, when did you get your license? When did you?
Right, yeah. So they will do a bit of. So there's obviously going to be another fact finding sort of mission once someone claims. Obviously, it's not a cut and dry thing. There'll be so much goes into it.
Generally, it's all based on GP reports. Basically, that's for for any health, anything like that, which most of the claims are for that reason. So it would just go on that, and then even if it was from a parachuting, actually they'd say, that would come out in a GP, or broke his leg because of that. All right, then they investigate further. Well, how long's he been doing that?
Because on application we'd have said we don't do skydiving as a hobby, or as a sport. So if it occurred that actually he did that every week, then that's non-disclosure, and they might have put an exclusion on that particular hobby, like they would do with martial arts at high level, or rally driving, things like that. So how I relate that to a mortgage is they could have the cleanest credit history, never missed a payment, perfect job, but that company goes bust, then suddenly they're out of a job and they miss credit card payments. The lender is assessing them on today. 6 months down the line, that company goes into turmoil, they lose the job, they're in the middle of a recession. That person may start missing payments but never has, but the lender's built that risk into the overall assessment of underwriting. these guys are taking the risk because just because you're healthy doesn't mean you can not have a heart attack. Just because your family history is perfect doesn't mean that something can't happen to you.
Yeah.
So they've already built that risk into it. And it's how the providers work. So how I like to talk about protection, because life insurance is all we've talked about really there, right? But
I was just about to say this. You mentioned critical illness.
But for you, Baz, like a dad of 4, life insurance. God forbid anything happened to either you or Elna. If it did, it's happened and it's done. That is it. Like someone's died and you've got to get on with your life. Financially, we hope that there's things in place that can make that as pain-free as possible. Obviously, it's going to be horrific, but if finances are taken care of to an extent where you can survive and not really have a detriment to your life going forward, especially when the kids are that age, then that's a tick in the box and that you've got the right life insurance. Where critical illness is important for me is because, again, sort of to keep saying God forbid, but it's true and you touch wood every time when you're talking about stuff like this. But if anything happened to one of you where, say, you were in a coma for 6 months, you can't go to work, so you can't bring in an income, but also you can't care for your children. And let's say that results in you being unable to walk and needing round-the-clock care, and you're at home, then your wife and children will become carers to you, so they can't go to work, and you need that round-the-clock care. But you haven't died, so your life insurance hasn't paid out.
Right.
Your death in service hasn't paid out. So what happens then? That's where critical illness comes into it. Right. And that's where it would actually...
So that's when you're still here, but you can't function then, in effect.
Yeah, so let's say you had a stroke.
Yeah.
And you were left severely disabled because of the stroke, and you needed round-the-clock care. Yes, at some point work will stop paying you and you'd have to leave work, and there may be a compensation package within your benefits there, but it's not going to be death in service. Yeah? So you're going to have life insurance which isn't going to pay out because you've not died. Yeah? Your savings are there, but your income's stopped, and your partner's income may be affected because they can't work 40 hours a week and look after the children.
Yeah.
Still got your mortgage to pay for and things like that. Critical illness cover is there to cover that gap and that risk. And clearly, that's going to be more expensive than life insurance because sadly critical illness is a lot more common than deaths. But to me, financially, for me and you, critical illness is the biggest risk to me financially because I'm still here being a burden because I need round-the-clock care for me, which my income stops because I can't do this, and my wife can't go and do what she does because she's got to look after the kids and care for me. So both incomes within that household are affected, and that's where critical illness comes in. And Joe's got some good statistics. We will put a link to it because we've got to, and we'll have made sure that this has been verified. But these statistics, for all they may have moved left and right since they were produced, are a good representation of where we are in the risks. And Joe will explain these figures because I think because they're so scary.
Yeah, well, basically, it's like a risk calculator, really. So what is the risk? I've taken, for example, here a 40-year-old. I've done it for male and female, and I've done smoking and non-smoking. So it's what is the risk, and this is for someone who's maybe retiring, say, at 68.
Yeah.
Now, so for a 40-year-old male, who is a non-smoker, there's a 6.7% chance of him dying before his retirement age.
Right.
There's a 18.8% chance of him getting a critical illness before he's
and what was
68.
the first one? Sorry,
6.7 of dying.
Right, that's 1 in 5.
And then and this is again a male 40-year-old non-smoker, there's a 36.4% chance that he's going to have at least 1 month off work before he's retiring. So added all that together, so the chance of one of those three things happening is 46.1%.
And that's me. That's me, non-smoker male.
So when you're saying there, you mentioned there about 1 month off work.
Yeah.
Is that when your policy triggers? Usually, or is that just something that what's the relevance of that?
That's a 100% conversation for another day where we do a podcast. But just to answer your question briefly, if you've got income protection with a 1 month deferred period, it would kick in then. Okay. So you would be a month out, and that's what we call deadline to breadline, where you would need to have that savings for the month. And we would talk to you about that at income protection.
I was going to say, I think
this needs to. it's bigger than I ever thought.
But that's, I mean, if you're looking at those stats there,
so that was
that's
a male.
That's a male. Take it as a smoking. If it's a smoker, 40-year-old, there's a 16% chance of him dying before the age of 60, before the his retirement age of 68. There's a nearly just short of 34% chance of him getting a critical illness. just short of 47% chance of him having a month off work before the age of retirement. And the chances of one of those things happening before is 68.9%.
Madness,
Now, I'm not being funny. Like, if I was going and getting the Euro Millions, I'd be putting a good wager on that. Happening.
But that figure there, the 46.1 for the which is both me and Barry, 40-year-old non-smoker. That is me or you. Me or you, statistically,
still have almost a 50%.
One of those would either die of
Crazy,
critical illness or need a month off work.
And that's to when did he say? About 68?
I've put a retirement age, yeah. And you can do these risk calculators until...
Everyone can play with them.
Yeah, absolutely. They say there's
interesting,
on the
isn't
website.
it?
And you can put your own retirement, you lower it down to 65, it depends on, so you can, mess
but
around.
But it shows
with
there as well, like the difference, even just when you were looking at the dying and the critical illness are almost doubled.
Yeah.
So if you're a male smoker,
Crazy.
one in three before the age of 68, 1 in 3 would get a critical illness. So that would pay out. And if you took a critical illness policy of 100 grand, level cover, say, for 25 years, you're going to, well, it would have to be 28 if you're 40, but you're going to be then protected for that amount that you have insured yourself for. Yes, it's going to be expensive, but go back to the car scenario. You insure your car, you insure your pet. Why are you not insuring yourself? Because for that small amount of money, if shit did hit the fan and that's what happened to your with your family and critical illness happened, you should not be worrying about money.
No.
Can you afford not to take it? That's kind of the question.
That's it,
should be concentrating on getting ready.
Yeah.
That's the so when someone comes to us and goes, I'm going to mortgage £1,500 a month, 10% is my rule for budget straight away. They say, all right, I've looked at this house, done my own research, mortgage payment about £1,500 a month. Well, actually, I'm going to be looking at their budget and saying, well, you also need to have your building insurance, your life insurance. Yes, we could go on council tax, electricity bills, but no. I want to combine that mortgage payment as a total payment. So if they give me a £1,500 budget for that property, I'm going to look at a way to be able to understand how they could afford that additional extra of 10% to cover the insurances. Whether that be put up their budget to $1,650 and talk to them about how important it is, because they might have a separate budget for insurances, or incorporate that to the mortgage. So, for example, someone has a mortgage for 25 years, that is, just for argument's sake, £1,000 a month. If I can get that mortgage payment down to £900 a month and take it over 27 years, then why wouldn't I have a mortgage protected for 27 years instead of a mortgage unprotected for 25? We have this conversation, so we're blue in the face, and guess what? You still don't have to take it. You don't have to. You can say, Paddy, I get you and I understand. That's all Joe wants to hear. I understand you, I hear you, but I'm still going to say no. And if Joe hears that, she's done a job.
Right.
Because they've
just
understood.
coaching, I'm not, like I say, there to tell anything. It literally is to let them understand what they're saying no to if they, if they do.
I'm going to chuck a couple of questions at you then, Joe, but I think this is going to be a 2 or 3, 4 episode podcast, isn't it?
It's an introduction to protection. This is you don't need it by the lender. You don't have to take it, but why the hell wouldn't you? And then we can explore loads of different subjects later.
So how first question is, how do you go about educating people? Like what are you doing to break down these barriers? So you're getting people like me who could be tight or just uneducated on it. How are you?
You know what? It's just having, without talking to them, it's talking to them in layman's terms, just normal conversations about what could happen. I think when they know, and I make it really clear from the start that it's not a sales exercise. I come from the hospitality industry, so I'm about servicing people, and hopefully that will come across when. So it's like I said, I'm not a salesperson. So I think it's when you generally care because you understand the consequences of not having.
I think that's the thing, isn't it? Though it's getting that fine line to not be selling stuff, but like education.
It is coaching. I mean, I've come from the fitness background, so that's what I used to do, and I see this is exactly the same thing. That I'm a coach. All I can do is say to people, ask them the questions. What is it they, what they've got, what debts they've got. Look at what cover they already have. Look at the work benefits from there, And then, understanding from that when you've got that whole picture about them, is to kind of then go, okay, where are the gaps in your cover? These are the gaps. These are the solution to those gaps.
Yeah.
But when it comes down to it, it's up to you whether you want to take it or not. And I think as long as it's not the kind of the hard sell and I think it's just develop rapport with people.
Sometimes
But if you're interested in people, you have that. It's a conversation. That's all it is.
It's being a bit empathetic about it and all, isn't it?
Yeah.
And I think for me, it's the main thing is seeing the ads that you were doing to start with, which were like, you pay for this and pay for that, but why are you not? Why aren't you paying for this, which is looking after basically your kid's future, your wife's future, whatever your partner's future?
It's just kind of looking at. I think it's planting those seeds, looking at the concept. It's the scenarios, because you can actually hear the penny drop with them sometimes on the phone. There'll just be a silence, and just go, "Oh God, I never thought of that," because everyone wants to protect the main breadwinner. But they forget about it, and which often is still the male. But then when I say to the bloke, well, actually, what about the life or the critical illness for your wife? Oh, well, she's only earns. Okay. Yeah. However, if something happens to her, what's going to happen to you? Three children. So what? Hold on a minute. She's actually got a harder job than you. So.
But you don't think of that. You don't. And I'm not saying it's a male thing by any means, but you don't think of that if you're not. It's all about getting the public educated about, because it's a massive thing. That. Yeah. I mean, I take it you've got plans, Paddy, as ever, with you. Marketing and Facebook campaigns and things to keep pushing it, and so people know.
Like Joe's just said, it's a service, not it's another department that's going to look after our customers, and I think that I will sleep better because we've had many of the customers contact us because they've needed to activate the policies. We've had customers who are no longer with us. We've had customers that didn't know if they took the policy out, yet the last email thread between me and the customer at the time was, no, I don't need it, or no, I don't want it. And they've just panicked when it's happened and thought, oh, did I or not? But at the time, it just wasn't something they were interested in. No one knows and no one's excluded. So the education is what we want to get out of this. We want to be partnering up, doing briefs and making sure that we do talks at military camps to explain what they have now, what they don't have, and what they could have. Right. And as long as we've done that, then we can sleep at night.
Yeah, you've done your bit.
These mortgages are going to be protected or not. And when they're not, the person needs to understand what they would have to do in that instance, which sadly is sell the property in these circumstances where they can't repay the mortgage because of a policy they've already taken because they opted out.
So another question I've got then, what happens if you've got critical illness and you get, I don't know, a disease or something bad happens, like you say, they pay out and you get better?
That's fine.
That's the aim.
That's it. And that's, people think, and I thought that as well, that you'd only pay out if you were going to die.
Exactly. So is it not? It's not terminal. It's
not terminal illness. It's critical illness. So and thank goodness, you take the cancer statistics at the moment that this research that's gone in there. The prognosis is much better than it was 10 years ago.
Touch wood, obviously won't ever happen, but I get something like that where. I take it has to be at a certain level before.
Every provider is different. Right. So yes, I mean you might get some skin cancers which might not be covered, but the main ones are. So you would get a lump sum, tax free, payout.
And what would happen then if they said to you early on, oh yeah, you're only going to you'll be back to work in 2-3 months? Would they still? You
can have a critical illness and not even be off work.
Yeah,
we've had customers, and it was one of our customers. I can't mention names, but I can certainly back it up if anyone's ever questioning the authenticity of this story. But I found out via Facebook that someone had a critical illness. One of my customers, I contacted them to say that I'm here when they need us, and when we get round to it, or when they're ready, we can help them with their application to make a claim if needed. They didn't realise that they had the ability to, and thankfully they were okay, they were fine, but that policy paid out
So they-
£50,000.
It's about the
They didn't know that was even because, again, like Joe said, they thought, oh, well, I'm okay, so I'm fine. But they still went through that, and they were just one of the lucky ones.
Yeah.
But you could lose a limb, you could lose your sight.
Yeah. So it could be something that still impairs you.
It's a diagnosis, not the prognosis.
Yeah.
Basically,
Right.
that's what critical illness is about. You know, it doesn't matter about if you're going to die or not. You know.
Oh, that's good. And final question, do you think it will be a legal requirement in the future that it has to be taken out some form of insurance when you take a mortgage?
I think, like you touched on the PPI aspect of it, is I think brokers and the banks themselves, when they're dealing direct, are going to have to be making sure that the customer understands what products are available to protect them. And I think the more and more people, especially young people, that are taking out these policies, and then we have all these critical illnesses, which we're a bit more aware of because of the platforms that are out there where we can find out if our old schoolmates going through things. It can happen to anybody, but I think it's absolutely a responsibility of the lenders, us, to be educating. Does it need to be a legal requirement? Probably not. Should it be something that has to be proven that they've had that assessment? Because what we don't want is a customer saying, I can't afford it, because they're taking out a mortgage. If they can afford to pay the Sky bill or the gym bill and things like that, then is I can't afford it just an objection because they just don't want to take it. Too many people are thinking, I'll just sort that when I get the property. There's no rule on critical illness and income protection and life insurance. It can happen at any point, otherwise we wouldn't be taking it in the first place. Yeah. If we knew that it was going to be needed, then
you would do it just
we'd be laughing, wouldn't we? So to me, it's one of those where we just need to be educating people. I don't care whether it's a legal requirement. We wouldn't change our processes. We'll never shove something down the throat because someone will just cancel it. But we want the person to be able to take something that's affordable. But if it was £200 a month and the mortgage is only £200 a month, then that person has to weigh up that and think, actually, you know what, I can't afford that at all. And we get that. But we need to make sure that they see what is unaffordable, and therefore, if they can't afford £200 a month, what would £20 a month get them? And is that going to be
is better than nothing?
Exactly.
Something's better than nothing. So I think I don't care what the legal requirements are.
We're still going
to make sure that they're educated. And as a wider industry, I think basically if you've got kids, you should have life insurance. If you've got a mortgage, joint asset, you should have life insurance. If you've got an imbalanced income coming into the family, whether it be just be a married couple or partners, then there needs to be life insurance. Because
pushing that message that it's not just
gone, the lifestyle, whether it's £1,000 a month, £2,000 a month that they're used to, when you're gone, that is gone. The income will
But like you
stop.
say, it's not just the person who's the main wage earner, the breadwinner. It's the other way. It's just as bad, isn't it? So we've tied that up nicely. I think I'm just going to fire a couple of little extra questions at Joe. What's the best thing about working in protection and for Patrick James Solutions?
I think for protection, for me, like I say, I was in hospitality for over 30 years, and I still kind of feel, although it's a financial industry, which I thought would be very, very different, and it is, I still feel the protection side is kind of still doing and servicing like I used to. In
so those transferable
jobs.
skills.
Absolutely.
In effect,
yeah. When I used to do, back in the day, I was a personal trainer, fitness instructor, and all that. So you had to kind of go through all that health. So it's kind of that those skills have obviously transferred over. But also, like I say, it is a servicing people, and it's still kind of that rather than it's definitely not a selling job, which I kind of thought probably it was going to be at first, which is, but, so that's kind of, that's the side I love, and I'm a bit of a chatterbox as well, so I do like to talk, talk to people.
So, what's the worst thing about working, not for Patrick James Solutions, but for Paddy?
I haven't got time. That's going to be another.
That's similar to Alice's response, actually.
Force podcasts.
Force podcast.
Exactly.
Have you enjoyed it?
I have actually, to be fair. I have. It's my first. My first one. So I have enjoyed it.
There's stuff that you probably didn't know. Not saying that you didn't know that you know, but there's stuff that you probably didn't think these people don't know that. I'm like the stooge here. I don't know anything about this industry, and so for me, it's educating me.
Yeah.
And it just goes to show if you can do it for me, then.
Yeah. Well, I think as well, I was like that, not, over a year ago now, but so I'm very aware of what people don't understand, because I was that person, not understanding what things
So
were.
it's probably a benefit for you not coming from the industry.
Absolutely, because I can speak to people in normal language.
Yeah.
And do you know what the best thing is that Jo does? She's a protection advisor only. She concentrates on just that, because it's a minefield. Like, Jo has overtaken all the advisors in this business on the protection side, because we would seek protection as part of the mortgage process, but we didn't have the time, because it's impossible to look at all that mortgage criteria and then keep all the protection criteria in your head. You wouldn't have time to deal with this many customers as we do. So having Jo and her support Bobby with the protection to know ins and outs of protect, we know that our customers are just in the safest of hands. And the fact that she's turned it in, because it is a department, it's its own wing, she's turned it into a service, and it's not part of the sales process. It's just about looking after our customers. We know that they'll have had the chat, and God forbid anything does happen, we'd have tried our very best to make sure
you've done your bit, which is all you can do, isn't it?
Honestly, if you don't worry about it, you're crazy in this industry, because it's a huge thing. And it's your reputation, but also, like, we do give a shit. We really, really
So one final thing then, what is there anything that's holding you back from either, sort of red tape or anything that's holding you back from pushing it further, kind of thing, and getting more people educated or getting more people to sign up to it? Or do you think...
Well, I think I'm still going through a learning process myself, so I think I hope it'll build, the whole protection side, and obviously as I can increase my knowledge, that'll all kind of build. So happy where we are at the moment, but it's for longer term, I think
red tape's pretty lax, because they want us to be having this conversation.
Yeah.
But I think it's the public's perception of insurance, like you touched on, is like, oh, it's tarnished, it's had its bad days.
They'll never pay out. They don't.
All you've got to do is spend 10 minutes with Jo, and you'll know we're not about that. And it might be that Jo just has a chat with you to confirm that whoever spoke to you last time, or when you were younger, your parents pointed you in the right direction. You've already got the best cover, and that's job done. We're not going to just, because the policy wasn't with us, try and make you switch to us. We're going to be like, well done, pat on the back, off you go.
And again,
I think it's important to say, with insurances, it's so different now. I mean, like the providers that we work with, in fact, most of them. It's not just about a policy document which you put in your training, and you never think about it until you need it. They offer so many additional benefits now to go with, with that.
I think mine, I got like, was it cover on me hands or something like that for I think Chris got me that for playing the drums off, like being graphics.
I mean,
and
there's things like they'll do things like some providers will do like annual health checks. You do like a fingerprint blood sample, and they'll test like 20 different variables on there. You get GP consultations. You can get like anytime like health lines, so you can contact some. So your insurances are kind of
more than just insurance.
Absolutely, and especially at the moment, trying to get a doctor's appointment.
Exactly.
For what you're paying, I'd like to get something back, and you can with these policies. But I think that's a perfect way to end, because I could link now to 10, 15 other podcasts that we could do with Jo on just simple things like the benefits and the extras that come with it. But I think the important thing to be saying is the myth that we're busting is that you need life insurance to get a mortgage. You don't. You can get a mortgage without life insurance, but why would you? That's what I'm saying.
Another quick myth, I take it, it's for if someone does come to Jo and they don't end up taking a policy, or that Jo advises them, I take it there's no fee for that the same way as it would be with...
No. It's there is no fee for the protection side of the business. We're paid from the providers, but it's a case of making sure that if they need it, they have it in front of them of what they need, and if they want to take it, they take it. If they don't, they'll sign a disclaimer to say that they understand the recommendation that we made, but they've chosen not to take it. That protects us and them.
We're in the process at the minute of updating your website, and we're going to put in some more FAQs and myth busting and things to do with protection as well as the mortgage.
And the majority that's going to come from Jo, because what's the point of me talking about it? I think you need to be hearing little 60-second snippets. We've got our own Facebook page for protection itself.
And we'll keep putting up your Facebook little ads and things to obviously very nicely designed by Be Creative Cumbria.co.uk. I didn't get that in every episode. So
but the next one, we don't know what it is, we never do, but we're doing this weekly. Get following us, subscribe, share it. And we hope that you found this useful. And until then, thanks for
Yeah, it
joining us.
was really good. That
Thank you
enjoyed
very
it.
much.
Thanks very much.
Righty
Good to
ho.
inform me.
Take care and catch us all soon.
Bye.